According to Jake Claver, XRP won't change your life if you do this. Many people enter the crypto market believing that XRP's price alone will be the key to financial freedom. Social media is filled with bold predictions, massive price targets, and stories of overnight success. But according to Jake Claver, the CEO of Digital Ascension Group, this belief is dangerously incomplete. In fact, he warns that XRP won't change your life at all if investors continue making the same emotional and unstructured decisions that have ruined profits in past market cycles. So in this video, we are going to break down Clover's message in a clear and practical way, explaining why strategy matters more than hype, how poor planning amplifies risk, and what serious XRP holders must do if they want long-term success instead of short-lived excitement. So, why does price growth alone fail to create wealth in XRP? Jake Claver here strongly emphasizes that price appreciation by itself does not guarantee financial success. Even if XRP experiences a powerful rally, investors can still walk away with minimal gains or even losses if they act purely on emotion. According to Claver, many investors panic during volatility, selling too early during pullbacks, or exiting impulsively once profit appear. This behavior turns what should be an opportunity into a missed chance. Volatility is not the enemy, but unprepared reactions are. Without a clear plan, even a historic price surge becomes meaningless. Claver's, Claver's insight highlights a harsh truth. Wealth is not created by price movement, but by decision making during that movement. So, how does a lack of strategy increase market risk for XRP investors? One of Clower's most critical warnings revolves around the absence of structured planning among retail investors. Many people buy XRP without defining when to take profits, how much to sell, or how to manage downside risk. When sharp price swings occur, as they often do in crypto, fear and uncertainty take over. Without predetermined thresholds, volatility becomes overwhelming rather than manageable. Investors begin reacting in real time, often selling or unfavorable prices or abandoning positions that no longer align with their long-term goals. Claver explains that price action offers little benefit if decisions lack a rational framework. In this environment, the market doesn't punish ignorance, it exploits it. So, why does preparation matter more than luck in crypto investing? Claver directly challenges the idea that success in crypto comes from being lucky. Instead, he argues that financial breakthroughs reward those who prepare before opportunities appear. Preparation includes understanding position sizing, setting partial exit strategies, and planning responses to various market scenarios in advance. Applied to XRP, this means balancing belief in its long-term value with practical execution. Blind conviction is not enough. Investors must know exactly how they will react during parabolic rallies, deep corrections, and long consolidation phases. According to Claver, those who prepare systems for success are far more likely to benefit when momentum arrives. So, how does broader market sentiment reinforce the need for discipline? Claver's perspective is not isolated. Across the broader crypto community, experienced participants increasingly agree that volatility is a feature, not a flaw. It's not a flaw of digital assets. Instead of trying to predict every move, many investors focus on consistency and execution, whether through gradual accumulation or systemic profit taking. This structured approach minimizes emotional decision making and allows investors to operate calmly regardless of market conditions. The key insight here is simple but powerful. A defined plan creates stability in an unpredictable market. When emotions are removed, clarity replaces chaos. So, what legal and structural risk do XRP holders often ignore? Claver extends his guidance beyond trading behavior into asset protection and long-term financial planning. He reminds investors that cryptocurrencies are legally treated as property, which can expose personal holdings to legal, tax, and financial risk if not properly structured. He encourages XRP holders to explore solutions such as trust, limited liability companies, and institutional custody frameworks. Additionally, he highlights commonly overlooked considerations like tax efficiency, estate planning, and inheritance strategies. In certain cases, borrowing against digital assets through a regulated institutions may provide liquidity without triggering immediate tax liabilities. According to Claver, true financial success is not just about making money, but keeping and protecting it. So, can Foresight outperform entry price in long-term XRP success? In Clover's assessment, sustainable success in XRP investing depends far less on entry, price, or portfolio size and far more on foresight. Investors who plan early for both opportunity and risk position themselves to benefit from future market expansion without being derailed by volatility. This mindset separates speculators from strategic investors. While many chase price targets, prepared individuals focus on execution, protection, and longevity. Over time, this approach compounds results while minimizing regret. And finally, my own personal opinion about this is that Jake Claver's message here is one of the most realistic and necessary reminders in today's crypto landscape. XRP absolutely has the potential to be life changing, but only for those who treat it like a serious financial asset, not a lottery ticket. The market rewards discipline, preparation, and foresight far more consistently than hype and emotion. If investors focus less on price predictions and more on strategy, structure, and execution, XRP can become more than just another speculative trade. It can be part of a sustainable financial future. And this finally ends our video. Thank you very much for watching and see you on the next one.